So to get us started, I wanted to maybe just begin by getting an operational update on where we stand today. I know it's been a really challenging period for Weatherford. You saw a loss of about $1.9 billion last year, and then you emerged from Chapter 11 right into COVID. So give me a health check on the company heading into the second half of the year.
Sure. Dan, as you said, the company's been through a lot. It's been a fairly challenging period, but we've had some really great improvements, and the team has done an outstanding job. So we took out $800 million of cost last year in 2020, and actually ended the year with positive free cash flow of $78 million, which was a huge accomplishment for the team. We've continued that momentum on into the first quarter of 2021, where we delivered, again, strong EBITDA, and we delivered positive free cash flow of $70 million. So we feel we've, not fully turned the corner, but we're making progress on a lot of different elements. This is a multi-year journey for us. We've got a plan that's set for a milestone of 15% EBITDA and free cash flow generation. That'll take us a couple of years to get to, but we are confident that we've got all of the elements in place. And along with a little bit of rebound in activity, we are cautiously optimistic going into the second half. We see the market improving, maybe not quite to the extent that others are forecasting, but we are certainly a strong believer in the pent-up demand that exists in the system. So we're looking forward to that coming through in the second half and then in 2022.
Okay, so unpack that for me a little bit further, because it does seem like the fundamentals have really improved. Commodity prices are up. The operating environment has definitely gotten better, but coming off a low base. What are you doing now to find sustainable profitability and regain market share in this new chapter, as you've described it?
Sure. So we've laid out really a few key imperatives, four of them that we are focused on within the company. The first is really a North American business, improving the performance of that. That's not as huge a part of the company as it used to be. It's now about 23% of the business, but still a very important part. So driving that. The second is a focus on variable cost optimization. We think we've got a lot more avenues to charge and drive that. The third is really what we call organizational simplification. And it's not just a euphemism for taking more structural cost out, though that is an element of it. It's really about streamlining the way we run the business and scaling our business down for what it is today versus what it used to be. So, and the last piece of it is continuing the working capital emphasis that we did last year with a big focus on inventory rationalization. So those are our four imperatives for this year, coupled with strategic vectors that are really around our portfolio, digital transformation, and the energy transition. So that's what we're driving right now to make sure that we are stable within the company. And our paradigm really within the organization is that we are focused on current activity levels and making sure that we can make the business profitable at these activity levels. So as activity increases, it should come through at higher fall-through levels for us and be accretive. But we want to make sure that we are never in a position that the company itself is not profitable, even if activity stays flat.
Okay, so when you look at current activity levels, then are you confident now in saying that the worst is over? Are you confident in the strength of this macro and sector recovery as well?
Yeah, I think, look, we've certainly come off the bottom or the lows of last year when pretty much the whole world got shut down, but it's still very sporadic, and we see it very mixed in different parts of the world. We are seeing strong activity in the Middle East, but we still see some logistical challenges, as an example, in the Middle East market, with some of the countries still not fully open. On the other hand, you look at Asia, and we've got, unfortunately, the second, third, and multiple other waves happening of the virus and its variants. So right now, it's really a question of how fast the vaccination rates take hold, and hopefully get to a point where, for example, in North America, we're really starting to see more signs of normalcy than we've ever seen before.
I also wanted to get your take on what we've seen over the past couple of weeks with Exxon, Chevron, and Shell, because it seems like some of your producer customers, the majors and the super majors, are at a bit of an inflection point right now when it comes to the energy transition. And of course, that directly impacts your business. So do you think the spotlight on net zero has changed the investment scenario for the energy sector moving forward?
Look, it's certainly an incredibly important thing. There is no denying that we are in the middle of a transition, and we all have to do our part to make sure that we are running our businesses more sustainably and more responsibly. So in terms of the change in the thesis, look, first of all, there is a fundamental change in the thesis on making sure there's a greater focus on driving returns. And that's something that happened regardless of this. And I think all of us, both on the producer side and on the service side, are very, very focused on that. As regards to the transition itself, look, our primary focus is really, first of all, to support our customers, to make sure that we are driving efficiency and sustainability into our operations to support them. And then second, we are looking at areas where we can drive new niches or new avenues of growth. On the first side, for example, remote operations is a big deal, automation, software applications, and those are things that we are very, very confident of and think we've got some great offerings. And then on the second part of it, on the energy transition, geothermal is something we're excited about. We've been a leader in the geothermal space for over 20 years. We've done a lot of different projects. That coupled with areas like carbon capture, et cetera, are things that we will be looking with greater emphasis and interest on going into the next several months and quarters.
What does this spotlight on net zero mean for your own turnaround strategy and future profitability at Weatherford?
Yeah, look, I mean, it's all about, at the end of the day, we are a company and we are responsible to delivering returns to our shareholders. So we cannot have one at the expense of other. We've got to do both. It's sort of the classic dessert fromage type of a scenario. But what it really means is we're going to have to figure out how to run our business, our operations in a much more sustainable fashion, get to that net zero set of targets while making sure we're still delivering the return. So it is going to require a ton of innovation, and that's something that we're excited about because that's something that Weatherford has built a legacy and a history on, is around technology and technology innovation.
Okay, so tech is the focus. Girish, I was on a panel only last week with the CEO of Baker Hughes, and I asked him this question. I want to put the same question to you. When you look at this situation with net zero right now and the spotlight on this, the focus on this, why haven't the investment plans of big oil been consistent with how the market views climate risk today? There seems to be a pretty serious disconnect here. So what's going on?
Well, I think each one of our customers is reacting with the maximum set of tools in their arsenal. I think there has been a fairly significant shift, especially if you look over the last 12 to 24 months, with a number of our customers, a lot of the large E&Ps, taking very decisive and very strong steps to address that. But at the same time, look, it doesn't shift overnight, and the world doesn't go to net zero and doesn't completely go away from hydrocarbons overnight. It's still going to be a very significant and important source of our energy needs, at least for a foreseeable future, while we continue to drive more sustainability and alternative forms. So I think it's a balance, and I think a lot of our customers and a lot of our peers are approaching it with that sense of responsibility, saying we've got to take care of all sides of the equation.
That's right. And these guys in the sector, you speak to some of these companies and they say, okay, the technologies that are in use today, like hydrogen, for example, or CCUS, geothermal, which is a big one for Weatherford as well. Okay, they're all delivering emissions reductions, but they aren't really enough on their own to meet the Paris Agreement goals. So do you think from an operator's perspective that we've got the right policies in place, the right regulations, the right economic incentives to deliver clean energy at scale, or is there still more work to be done on that front as well?
Yeah, look, I think there's a lot more work to be done, and there's, it's across a global spectrum of different policy frameworks, and so interweaving and linking all of those up is pretty important as well. And every country, every nation is in a very different position to drive that, and so we are very focused on working with our customers and with the authorities and regulators in each of jurisdictions we operate in to make sure we are in full compliance. But ultimately, all of this is really about driving the economics, but making sure that it is balanced with what is ultimately the right thing to do for all of us.
And when you look at the Weatherford example, I think it's fascinating what you're doing as well, because I know you've said in the past that you're basically transitioning from an oil-field services company with technology to a technology company supporting oil-field production. So talk to me about some of the technologies that you can deploy now and into the future to help bring Weatherford back, to regain market share and ultimately improve and bring back profitability.
Sure. So look, there's a lot of things that we're excited about in the company. We've got 3 or 4 product lines that are absolute leaders in their field and pull through about a third of our business revenue. So managed pressure drilling is one of them. Tubular running services, Our fishing and re-entry business is something that we are very proud of, and cementation products. So these are market-leading businesses or segments that we have within the company, and there's tremendous amount of technology. In tubular running services, for example, we've got a product called Vero, which is really an automated mechanized system, and for the first time in the first quarter, we had it deployed in all of our 8 geographies, which was the first time that's happened. So it's really taking hold, it's getting a lot of traction. We've got production optimization software. We've got a platform called Foresight that is coupled with our decades-long history and leadership in artificial lift, and that gives us a very significant edge. So that's something we're extremely excited about. And then new innovations across the spectrum. We've just launched, for example, a flow meter called Foresight Flow, where we've actually taken the nuclear source out of the flow meter, and that's a tremendous innovation for the industry. So it's a lot of different things that we're excited about, and it's been, again, at the forefront of what we've done for several decades, and we are very excited to bring that back to the fore and really talk about that and how we serve customers as the focus versus the challenges that the company has been under.
Before we let you go, I wanted to ask you about some of the fundamentals out there as well. Wouldn't be a CNBC interview if we didn't get your take on what's happening with the state of the economy and in particular oil prices. Look, we've seen a pretty remarkable turnaround here when it comes to oil. Sub 40 USD last year, we're back up around 70 USD now. Talk in the market of 100 USD oil, what do you think?
Hey, look, like I said, so we are focused on really driving our business at the current activity levels. But what we do believe is there is pent-up demand. But at the same time, there's a lot of different variables that go into the equation right now. We are not in the business of predicting oil prices. As someone once told me, I can tell you with certainty, it's either going to go up or it's going to go down. So, but really our focus is on how do we drive our business at current activity levels, get it up. But we do believe there is pent-up demand in the marketplace. And we believe over the second half of this year and then going into 22, that should result in higher activity.
Is there an optimal oil price level that would support your business from an investment perspective of the super majors and the majors?
Yeah, look, our business, it's really sort of a derivative effect of oil price rather than the price as such. So it's really the CapEx spending that customers go in and, how much they spend. So even, it's really kind of tied to the activity level. And, we believe that even at 40 to 50, our business can be viable and sustainable. So it's not something that we are hyper fixated on saying it has to go up for us to be successful.
And when you look at asset markets around the world, there's a real focus right now on what's happening with the global economic recovery, but at the same time, that's being balanced against some of the recovery risks, like inflation, for example. Is there anything that you're eyeing right now when it comes to the global macroeconomic outlook that concerns you or the trajectory of the recovery as it stands?
Yeah, look, I think a couple of things. One is the unevenness of the recovery that we talked about a little while earlier, right? Each region is a little bit different, and so how all of that comes to play and the balancing of supply and demand is something that we're keenly focused on, especially with with relevance to how we move people and goods across different borders. The second, as you pointed out, inflation is certainly a big thing for us. It's something that we keep a very close eye on. We've got a very global supply base, and we move a lot of goods and a lot of people, a lot of material around the world. And so that's something that we are very keenly focused on how to manage that, how to protect ourselves, and then how do we manage that with our customers. So those are really some of the key things that we are focused on and making sure that we've got the right plans in place to execute against.
Girish, anything you wanted to add before I let you go?
No, look, all I'll say is, thanks for having me on. We're very excited to have the company uplisted and back on the major exchanges. We really feel we've got some great momentum heading into the second half of this year and second quarter. And so look forward to updating all of you. And again, thank you for the opportunity.
Thank you so much. And hopefully the next one's going to be in person. We appreciate it.